This video is about the recognition of an annuity. An annuity is a bank loan which has the same payment every year. The payment includes interest and payoff. As the company pays off the loan, the interest portion will become smaller, whereas the payoff amount will become higher.
I'm Carsten Berkau, full accounting professor in Osnabrück. My BasicsClips will help you to understand international bookkeeping.
The case study is linked to chapter 15 of the textbook. The company CHATTY Limited takes an annuity with the principal of 25,000 euros on the 2nd of January in 2003. The agreement states that the rate of interest is 4.5% per annum. The annuity, which is the amount the company has to pay, is 2,500. For loans, we normally prepare a payment schedule. We see here in the first year, the opening amount is 25,000. The interest, as calculated, is 1,125. The total payment is 2,500, which means there is 1,375 for payoff. The remainder of the loan then is 23,625. When the company receives the bank loan, we make a debit entry in the cash bank account, 25,000. The contra entry is in the long-term liabilities account, which we refer to as the interest-bearing liabilities. Interest in the accounting period 2003 is 0.045 as 4.5% multiplied with the 25,000. We record the payoff as a debit entry in the interest-bearing liability account, which is the payment of 2,500 less interest. I prepare an interest and payoff plan for CHATTY Limited. I entered already the rate of interest as 4.5% in the cell delta 1. Next, I record the payment of the bank loan, which is 25,000, and I enter the annuity to the extent of 2,500. I repeat this for the next accounting periods as well. We further have to consider that the payoff amount for the next accounting period has to be disclosed as a short-term liability following the International Accounting Standard 1. We multiply 23,625 with 4.5%, which gives us 1,063.13. Again, we deduct 1,063.13 from 2,500, which gives us the next payoff amount, 1,436.88. So I record bookkeeping entry number 4. I just refer to that cell and click on the 1,400, and I make a debit entry in the interest-bearing liabilities account, and I credit the amount to the short-term liabilities. After I balanced off the cash bank interest-bearing liabilities and short-term liabilities account, and I closed off interest to the profit and loss account, I transfer the amounts to the balance sheet. On the balance sheet, I will show as the long-term liabilities the amount as it is disclosed in the interest-bearing liabilities account, and the short-term liabilities will be the liabilities which result from the payoff in the next accounting period. In the next accounting period, the company will pay interest again. So my bookkeeping entry alpha is the interest in 2004. The contra entry is recorded in cash bank. Next, I record the payment for the payoff portion of the annuity, which is bookkeeping entry Bravo. I make a debit entry in the short-term liabilities account to the extent of 1,436, and I credit the amount to cash bank. My bookkeeping entry Charlie is about the payoff for the next accounting period. and I take the value for the payoff from my interest and payoff schedule, which is 1,501. The contra entry is made in the short-term liabilities.
Now that you have seen the video, take the textbook and study the case.